Hello, Doc Severson here for the TheoTrade video for Tuesday, March 7th. I'm going to start out tonight's video on the Nasdaq futures here because I think what I'm seeing in the Nasdaq futures is pretty much across the board what I'm seeing elsewhere as well too, and it kind of explains what we're seeing these days. So after one of the strongest rallies that we have ever seen, certainly over the last 20 years, this is one of the most vertical and almost infinite slope rallies that we've ever seen. So these are not really sustainable types of rallies. And always the question is, what's going to come on the back side of this? And I think we're starting to see the answer for that, and it's going to reveal itself a day at a time. But if we zoom in here on the daily chart on the right-hand side, what we're starting to see here is just, four days now where we've been sort of drifting lower. And this really kind of tells you what's going on. So after all of this has been very linear, and now what we're starting to see is a little bit of a flag here. And so as we get into the fourth day in a row, all of a sudden you start to see the financial media sites starting to overhype this and saying, oh no, the market is doomed. Not necessarily, but I think we are in for a long period of rest, perhaps into this summer. I mean, if you go back and look at all of the other times that we've had this level of extreme rally, we've usually had some type of reaction from here. Whether or not it's some of the reactions that we had like in 2014, like this, or whether we just traded in a larger range, what I'm expecting, at least in the near term here, is going to be something more like this, that we trade in a little bit more volatile range, maybe do some sideways behavior like this, and it might take several weeks before we dig ourselves out of this hole and the market's ready to trend again. Now, one of the things that the market's going to have to process is a rising rate environment. So right now, as we're sitting here for next Wednesday, so a week from now, we're sitting here looking at about an 84% chance that Madame Yellen is going to raise rates another quarter point. So I think we're going to very quickly find ourselves on kind of the same rate trajectory that we had back in the 2004, 2005 timeframe. So if we're going to keep sustaining these sort of growth rates here, then rates will start to rise, and then we're going to be looking out at things like the 10-year note. And just from a technical perspective, this 10-year note, this is a very bullish pattern that's setting up here. So I would be watching, and perhaps we're not going to see this break until after the meeting announcement, but I doubt it. Usually markets don't wait to move like this. So we may start to see this thing move up in this direction. And as a result of that, we may have some other instruments such as the dollar index starting to move. We're starting to see that move here. And we also might start to see bonds moving down. Bonds have been kind of a bear flag setting up here. And I wonder if this is going to set up a lower high and really start to dive if rates rise. Now, the other thing to understand, I mean, this is all such a tangled web that we weave here, is that the Russell 2000 right now has been by far the weakest over the last 4 days. And this has come right after that big pop to the upside. So big time movement. I mean, when we're moving 10 handles on the Russell, that is not insignificant. And this is happening, I think, because in a rising rate environment, this is going to put more pressure on all these little companies that are part of the Russell 2000, which are almost entirely financed by debt. So the Russell might be leading the markets lower, and it definitely is leading the markets lower right now as we sit there. Now, one thing to keep in mind as we look over here at the tick, and so I'm going to go over here and actually change this out to the tick value. So we're going to be looking at, this is the New York Stock Exchange tick value. The last time I looked at the NYSE, it had somewhere approximately 2,800 stocks. And so this is kind of a reading at any given time. What's happening? Are stocks overall ticking up, or are the aggregate ticking down? So today we started to see some sell programs hit the tape here. This is negative almost 1100, and that's definitely a sell program that hits in there. Usually anything below about 800 ticks is classified as a sell program. Now, what we'll eventually see, and we have not seen this really since the end of June. So seriously, guys, we have not seen really any selling of any magnitude since the end of June. It's been a long, long time. We are well overdue. But if something does come in out of left field that's not already priced into the pie, then we will start to see some more serious selling. Now, when we start to get into negative 1200, negative 1600, I've seen as low as negative 1800. Occasionally you'll see negative 2000, but that's really, really rare to see something like that. That's when you will typically also see the waterfall declines where, you know, you'll see a market that's selling off and then all of a sudden goes into a waterfall decline, and you can't miss it when that happens. I mean, the last time that I saw something really, really fall like that was May 6 in 2010. So it's been a long time since we've seen anything really significant that happens during the regular trading hours. A lot of times when we do go into correction, we will see negative 30, negative 40 handles overnight. So we'll have a pre-market gap down 30, 40 handles. That's what occurred last February in 2016. We had some price action like that. But something that actually sells off during the day is relatively rare to have something like this. And so we saw a lot of this in 2007, 2008, partly 2009, and then after that it's been mostly up since then with only occasional selling. So just be prepared for it. We don't necessarily need to necessarily fear the selling. I think actually some strong selling would be actually very healthy for this market when it finally comes. But right now what I'm seeing in the tape is nothing to do with this. This is very, very mild reaction to an event that's coming up. Everybody knows what's going on. So the one thing that you can say about this market really since November and the election has been everything has been priced in. The market's done a really, really good job of discounting everything in and very, very few surprises, but that will not last. We will see something coming into the tape that the market has not anticipated to this point, and we will see some reactions coming up fairly soon, and I think that will ultimately drive us into, as of today, we will start to build that slightly bigger range that I'm looking across the board for just about every index that is out there. So will it be tradable? Absolutely, it'll be tradable. So that'll be started out with some heavy red candles at some point here, which is going to build up some volatility, build up some fear that's out there. But this is oh so necessary for a healthy market, is to build that range and take a little bit of rest. That's what I'm seeing in the market right now. Thanks for listening, folks, and we'll see you tomorrow. Take care.